Well, I would say, as our CEO has said many times, we don't care about volatility on a day-to-day basis, right? So, I mean, these markets are in early stages of development. Primarily, they're being driven by retail investors, and now the institutional investors are coming in. Slowly, what we're seeing is happening, and it's not slow, it's actually very fast, that the markets are deepening, the liquidity is deepening, there are a number of instruments that are being put in place, derivatives, future, and as you would see, you would find that the volatility will start to go down. I mean, we are talking about maybe 5-8 years in terms of the whole market getting developed. Capital markets take much longer time. And this market, of course, will develop much more quickly, but the liquidity needs to deepen, a lot of instruments need to be traded, and once it is, the volatility will come down automatically, right? And then the questions around stability, the question around being usage around the banks will automatically go away. So think about it, if banks were to come on the platform, automatically the markets need to be deeper, and they would also contribute to that deepening of the market itself. We are a company which already processes billions of dollars in transaction throughput, and it's at scale, it's already working. And a lot of banks, you are adopters of Ripple. Both are traditional solution that works with banks, and of course, our digital asset, which is essentially XRP.
We think of liquidity also in terms of where it is. And because our software solution is really about moving money from one place to the next, we're trying to solve around this problem that you can send a text message in 3 seconds or an email in 3 seconds, but it takes you 6 days to send $10,000 from here to Mexico City. So we need liquidity of XRP, in the case of Ripple, both in the US and in Mexico. Well, that's not a real problem. South Korea is great. But what's going to happen when we're dealing with Switzerland? Or what's going to happen when we're dealing with, Moscow's pretty good too, but we're really thinking about sort of pairs of currencies, and we need liquidity in all the markets in which we're transacting. So to have global liquidity to go from dollars into whatever coin isn't so important to us as to have liquidity from whatever the fiat currency is in that place to XRP. And we're working to build that both through our sales of XRP and to help develop and help. We really look at the market makers as partners. We really want them to be very active in a lot of places so that all of our banks that are using our software can access liquidity through those different market makers in all those different countries. We have a lot of financial interest coming to this where people want to invest in it. Institutionally, I feel like the institutions are just waiting with their faces in the window trying to get into this thing and waiting for some of these important issues around custody. I think there are important accounting issues as well in terms of banks and the way that they count the assets that they hold in their books. Capital requirements are so important to banks, some more than others. If this doesn't get counted as capital because their accountants because GAAP accounting doesn't yet allow for that, that's also, I think, a hindrance to this industry. But I think that those things do get solved sooner rather than when are there more futures contracts beyond Bitcoin, right? When does it expand to Ether? When does it expand to XRP and Litecoin, those most traded assets? And I think that's going to start to create lots of potential financial markets that go well beyond being long or being short or being long the future or short the future, puts or calls, whatever you want to think about it. I mean, that's going to enable products such as lending products, right? Banks sell off their risk by by essentially being short something or long something over the long term with contracts going out with currencies right now. They can't do that with crypto, but they will be, once they're able to do that with different types of crypto, then there'll be different kinds of lending products out there because they're able to hedge off that.
So look, I think number one, it's great that there's a Bitcoin future. I think that's wonderful for this space. And I think everybody knows that CME is an investor in Ripple. Everybody knows that I'm from CME. So, the relationship is very, very good. They're going to try the first big one first. They have to, right? It would be silly for them to start with anything else because Bitcoin is the most liquid digital asset in the world right now. They're not going to launch all of them until they see if Bitcoin is successful. If Bitcoin is not successful, and there is no guarantee that the Bitcoin future will be successful. If it's not, then they're not going to keep launching these. Right? TBD, I think patience is good. We still have a little bit of work to do on listings for XRP in the States. If you look at the CME future, it's got 4 prices, 4 good prices, 4 exchanges. We don't have four US dollar listings in the States right now. So I think it would be challenging for them to create the index for the future today. So let's just see how things go. But if Bitcoin is successful and we do our job, that's certainly a possibility down the road.
Our purpose was to make XRP as liquid as possible. One of the things in order for it to work through the system was that it would be the conduit between transactions around the world. And if you looked at FX being that conduit around the world, that average volume a day was like 5 to 6 trillion. So if we were going to be able to make transactions of that quality go through, you would need to have a much more liquid mechanism. So that's where you can either see the price rising to accommodate for the volume necessary, or you can see the liquidity increasing for volume necessary to handle. We break it down to kind of, if similar to that, if you've got one structure being infrastructure, so that's like your exchanges, your OTC desks, kind of that core venue that you're going to be trading on. Then you've got the speculators, which can be anything from, a retail day trader all the way through to, significant endowment or a fund. And then you've kind of got the third leg that doesn't really exist yet, and that's corporate flow, which is a significant reason why the FX markets move. What is that? You've got that consistent need for a company in one area to make a transaction repeatedly based on their needs from a corporate perspective. So you think about Toyota and their dollar yen, they have to repatriate all of their revenues from overseas every quarter or every year in order to clean up their balance sheet and prepare for a fiscal year ahead. So those flows don't exist yet in the crypto markets, but we're working on it. So that's one of the things where if you have that consistent flow, then the speculators will be able to take advantage of those different seasonalities of corporate flows, but you'll also just always have momentum in the market taking place. So I think that's one of the factors that Ripple was really working on, was being able to provide a mechanism to which corporate flows would be consistent. So you'd have people using the mechanism of XRP in order to send flows from one country to another at a consistent pace, or at least a repeatable one. And then the speculation, or that arm, would be able to go as they please. But that way you'd always have kind of two-sided markets naturally.
But as David Schwartz said, we believe that the world is bigger than just one company or one technology.
ですが、先ほどシュウォーツが言った通りですね、一つの技術だけで世界が、解決するとは全く思いません。一つの会社だけでもそれは無理です。
And that's why we built Spring, the open platform for money.
なので私たちはスプリングを作りました。お金のオープンプラットフォームです。
Spring is not just for blockchain developers, it's for all developers across all different currencies.
で、ここに書いてある通り、もちろんスプリングはエンジニア専用ではなく、あらゆるエンジニア、あらゆる世界の人に向けて作っておるんです。
Spring is focused on the $5 trillion a day FX market.
で、スプリングは5兆ドル、1日5兆ドルもの規模の FX マーケットに着目しております。
Compared to the $2 billion a day crypto market.
まだ暗号資産は1日20億ドルぐらいしかいません。
XRP is going to win the payments case, and we think Bitcoin will be a store of value, much like gold. And I think when you look at gold, and I cut my teeth on gold, I spent 15 years as a gold trader. That space is an interesting one because nobody is naturally short gold. You don't eat it. You're not going to build your house out of it. You don't put it in your car. So in a vacuum, if gold goes up to $10 million an ounce, you don't really care, right? Similar to Bitcoin. But what that means is that you have an imbalance because there are folks who don't need to hedge one side of risk, and there's only folks who are long it, and they only need to do one thing and sell. So for a long time, that created this dynamic in gold that always was going down. That changed dramatically when the ETF came out, because now all of a sudden said, well, you can democratize the access to it, and people say, well, I am short one thing that gold helps with, and that's risk. Right? Everybody's short risk. So that changed that balance to the point where now gold could start to rally. I look at Bitcoin and I see it somewhat similarly, obviously in different points of its development, given how much older gold is than Bitcoin. But at the end of the day, you need people using the stuff for something, right? The liquidity has to come from users of the technology, of the assets, of the currencies. The reason FX is a $5 trillion a day market is not because there are a bunch of high frequency traders who trade all day. It's because there's a car company in Japan that needs to pay somebody for parts in dollars, and they have yen and they need dollars, and somewhere along the line that swap has to happen. So until we get to the point where I think we start to embed these technologies in real economics, I think you will see a sort of a cap in terms of liquidity and volume.
It's easy to be long this market because there's a lot of folks who have made a lot of money in it
who are not going to sell. So there's some selling pressure that you don't have to worry about. And then, as I mentioned before, it's really difficult to get short in any institutional size. So there's another selling pressure that you're probably not going to see. So I think you'll see these dips when people get scared, but really the large holders, they're not getting out. These pops in price, which are opportunities. Now, over time, again, the non-structural inefficiencies will be borne out, and as liquidity grows. But at the moment, there's some real opportunities there for not just traders, but even for payment providers.
Maybe banks get to a point where they're comfortable dealing at digital asset exchanges because these, like Bitstamp, for instance, is fully regulated and they have banking relationships, and definitely the worlds are coming together. So I think we'll get to a point where banks, no problem, will connect, to Coinbase or Kraken or Bitso or whoever it is, and source liquidity that way. Or the other alternative could be that as this space grows and as liquidity for XRP grows, and we get closer to that goal of institutional standard, places like a Bloomberg Tradebook or an FX All or a Reuters Direct, they start to list digital assets. Now, these are very traditional capital markets FX liquidity pools. If we get to that point, then it becomes very easy for a bank to run a payment through the ledger, right? But really, it's all liquidity dependent, which is really what you're solving for with respect to the cross-border payment with XRP.
The idea of moving large blocks of liquidity through these liquidity pools, which are disparate and kind of broken up, and is an interesting one, especially when you compare it to traditional markets. One of the things that I'm fascinated by is really the lack of leverage in the system, and I think it's one of the things that really constricts the amount of liquidity that's flowing through the exchanges and the OTC houses. And we'll probably touch on some of this later, but the fact that everything is basically pre-funded and one-to-one limits the amount of liquidity that goes through, especially the larger cryptocurrencies. So I think things are getting better, certainly, in folks like Circle and a few others in the OTC space really are kind of the trailblazers in that space and allowing to take that risk. But once we get folks to be able to go long and short in any considerable size and leverage those balance sheets, I think you'll see that get better.
That feeds well into the next question of when can we expect those facilities? What does the timeline look like for leverage in the system?
Yeah, that's I was in the back of the room listening to the previous panel, and custody came up, and when custody comes up, I immediately think, well, then the next logical step is obviously prime brokerage services and large banks offering a suite of products in crypto at some point that mimics what they do in FX and equities and commodities. I think until we solve custody, we can't solve that second problem. And I do think once we solve that second problem, then these markets will begin to look like other markets. Until then, really your number one place for liquidity is the exchanges and the credit risk that you want to take there or the credit risk that they want to take with you. The first step to custody, because there is no recourse if your assets disappear from your wallets, is insurance, right? If somebody's willing to insure those losses, then that can get larger financial institutions, I think, more comfortable with the idea of custodying the assets. I think also it's interesting, there are folks looking at this, right? I mean, there's Gemini custodies and ItBit custodies and Kingdom Trust custodies. So it's not like no one is doing it, right? But we've yet to have kind of, Goldman Sachs or Morgan Stanley or State Street, Boney. These guys have not jumped in yet, even though that you hear whispers and rumors that people are looking. But one of my jobs is to, again, create this liquidity pool for XRP and build a big capital market around it, because without liquidity, we can't fund, we can't create the liquidity that you need for funding payments through some of the products that we're building. But even if you had, and I know it's all kind of chicken and egg, but even if you had the prime brokerage model and you wanted to offer leverage to your clients, that means that you now have to go out there and source a bunch of Bitcoin or Ether or XRP, and that's not easy to do, right? I think one of the advantages that we have as a company is the fact that we sit on 60 billion XRP. So the day that Goldman wants to open up their trading desk, they don't have to go find, XRP. They just give me a call, which is nice. I think it's, and interest rates in this market are pretty expensive, so it's a nice recurring revenue stream one day. So but that is a problem. That needs to be solved somehow, right? Because you can't just have one person doing it. Because truthfully, what happens is that Goldman borrows from Morgan, that borrows from Deutsche, that borrows from Credit Suisse, and it's a little bit of ring around the rosy, and they all end up borrowing from a central bank. We are using it for investments, right? So we are funding other companies with our XRP. You'll hear some stuff about that as well. But really, we don't want to get rid of all of it because we do feel like being maybe a primary lender in the market will be helpful as we try to build liquidity in the space. So, the idea that we'll be better off with no XRP, I think, is not one that we're going to subscribe to.
We'll ever distribute all of it. In my mind's eye, there's a possibility where, we end up more of a lending kind of, more of a lender of last resort capacity, maybe. I think that would be a little strange for a software company, and maybe some things would have to change structurally. Maybe we have to have a different organization or something. Who knows, right? But as these capital markets develop, as liquidity develops, there are going to be folks who, if they want to provide liquidity in the asset, don't want to necessarily own the asset because that puts them in harm's way for price movements. So if you can borrow the asset and create liquidity that way, it's actually a much more efficient way to be part of the liquidity mechanism. It's how traditional capital markets work. I mean, my first job on a trading desk was managing the repo book, the overnight Tom Next kind of liquidity provision that every day we had to roll. There's nothing like that in digital assets. So partly because the transfers happen instantaneously, but also partly because it just hasn't developed. And one of my longer term goals, after I get the ecosystem built out, after I get payments running through there, as I start to merge or try to merge the two worlds, the digital asset markets and the traditional capital markets, as I try to do that, I think one of the levers that we'll be able to pull will be lending. And as a result, I don't necessarily know that we'll need some XRP, right, in order to do that. So I guess a long-winded way of saying, I'm not sure we'll ever get rid of all of it and sort of let it all out into the wild. Partly because there is some utility for us or maybe some other, organization having it to make sure that the markets are always liquid.
The other area that I'm also investing in is decentralized finance. So there's been a rise of decentralized financial products, of derivatives or numerous things on lending. And so I'm looking at different investment opportunities there, because there are different parts of the world that can really leapfrog the existing infrastructure of financial products and resources. If you want to be able to have a lending platform in other remote areas, I'm talking to one company that's focused on certain countries in Africa, and they're going to be launching a lending platform as well. And so I'm evaluating that one.
And so while we think about payments as the initial use case for Ripple, I'm thinking about what other cool products can you build that we can take our customers, take back to our customers. One of them being loans, microloans. So if you go into parts of the emerging world, getting a $10 loan is a big deal. It's called a microloan. And guess what? I think you can do that with blockchain in a way that you couldn't do it using the traditional system.
Oh, that's so cool.
I'm super excited about, what are some more transformative products that we can build to some of our more emerging market that are completely underserved, or in other words, forgotten by the traditional financial world.
Another reason that we're focused on payments, a lot of the blockchain applications that I hope you're going to hear about kind of for the rest of the week, we believe they depend on payments. So trade finance, gaming, lending, smart contracts, insurance, identity, supply chain management. At the end of the day, a lot of the power of blockchain is kind of faithfully recording information that you value. And you want to make that information dynamic. You want to transfer ownership, and that's a payment. And so we believe that this Internet of Value concept, which kind of involves all these applications, really relies on having kind of a strong payments infrastructure under the hood.
See it first is like the more adjacent the vertical is to the verticals that we have already, the more, the earlier and the better the target. So payments were terrible, we're making payments better. And like store of value, means of exchange were terrible, we're making those things better. So the logical next thing is like, what is something that's terrible because payments are terrible? What is something that's terrible because we don't have a good store of value? If we have a better store of value, and what I would give as examples of that are things like lending, things like trade finance, things like sort of like equity settlement, tokenization of assets. Like I want exposure. I live in New Zealand and I want exposure to Apple stock. Like how do I get it?
Right.
Like, or I live in Brazil, but I'd rather have exposure to the dollar than the Brazilian real. Like those kind of things that are adjacent, that are really close and adjacent to payments. And what I would also, and this is a little crazy, is like, if you want to have small companies that compete with things that big companies do, like Airbnb, for example, is a big company.
Right.
They have a large number of payment engineers that allow them to take money in and pay money out around the world, and that's what enables them to be so big. But if I want to compete with them, like let's say I know the Portland, Oregon area super well, and I'm going to inspect every property, and I'm going to come up with an algorithm to help them price it right, and I'll adjust their pricing to take advantage of supply and demand. I'm going to be fantastic. I'm going to be the best, like the Airbnb of Portland, Oregon.
Right.
But if my first step is I have to hire 200 payment engineers, that business is never going to get off the ground. So the thing is like, who can provide me that type of infrastructure at a one-stop shop? And then what can I do once I have that? Where I don't have to, if I want to be an Amazon or if I want to be an Uber, and I have to spend these millions and millions of dollars like on getting my payments right or getting my ability to move money around the globe, my treasury functions, like if I can do all those things super efficiently, who's going to give me the one-stop service? And then what are the new businesses that are going to become possible because they don't have to spend all of that money building up that infrastructure? That's like where we're going to go next, I think.
Wow.
There are other blockchain ecosystems out there that are very interested in security tokens. I think Algorand is looking at that. I think Stellar's looking at that. I know Ripple's looking at that as big new markets for them. And the standards are really important.
What variables impact a really liquid and robust, healthy market? And what would that look like for digital assets?
Great question. The components that kind of take place in a market include the infrastructure layer, and then as well the speculators, the liquidity providers, and then corporate hedging. That's huge in the FX market, which allows for two-way flow to occur. And that's really kind of the fundamental difference that digital assets currently are missing.
Liquidity is one of the significant hurdles for institutional adoption of crypto assets, broadly speaking. So when you think about, very traditional asset managers entering the space, they're all very interested. They're all doing their homework. They're constantly engaging and wanting to find ways to invest. But until they see deep liquid two-way markets and know how they can manage their risk efficiently, they're not going to enter, and certainly not in size. And so the development of derivatives and deeper liquid markets and hedging instruments is a very important strategic step towards institutional adoption.
If you look at a market, and this isn't, this is not a hard and fast rule, but if you have a market where you have a third liquidity providers and market makers, a third traders, whether they're professional or retail, doesn't really matter, and then a third hedgers, people who actually are using that liquidity for something, you have a very healthy market, right? The first bit is pretty easy to get. I mean, I've been building liquidity for a while, and all you do is pay folks to provide liquidity. The other two are a little bit more challenging, and we can partner with the hedgers, and then we have to build interest in XRP and RCO in order to bring more of the sort of trader community, if you will.